Today we will be looking at GFI. I'm not a financial advisor. GFI number 477 on CoinGecko. You guys look at the chart here. You can see it did have a big run up before the halving, I believe. Oh God, yeah, it did. Man, look at that thing. That actually goes back to 2022. Wow, this project, I did not actually know when this project launched. It actually launched the very beginning of 2022. I've only been looking at the recent news of it. And you can see the pre-halving pump that it had over here. And just like we were talking about, we'll pull up the chart here on TradingView. And we will look at the daily. Man, daily's already pulled up, man. You see, the trading doesn't go back very far here. And this shows you that at least on this exchange, which is Kraken, yes, GFI has been around since 2022 Jan 1, 2022. It's been around thereabouts, but it wasn't a serious investment. People weren't really interested in it enough to where somewhere like Kraken would put them on until the last year. And I think that really is indicative. I didn't hear about it or know about it until probably February or March of last year, maybe January. So it was new to me. And so looking at the chart, it is very fascinating. If we go back and we look at the CoinGecko chart that spans much further, and we were to be able to draw this chart, which we cannot on TradingView, you would see it has the exact same pattern. We would draw a line. There would be a line connecting, probably right there. It might not hit the very top of it. It might hit right here and then go doom, hit off that one, and then hit off here. I think it's very possible. What we're saying here is we are either at the end of the bull run completely for most of these coins, or we are about to see explosion like we haven't seen before. That's what the charts, that's what the long-term charts of many of these projects that were birthed in the last cycle are telling us. So it's just some fascinating stuff. So let's pull up the altcoin spotlight graphic here. So what is it? Credit without collateral. Borrowers access loans based on trust. Callable deals. Investors can recall funds before loan maturity. And Goldfinch brings real world lending on chain. So here's just a quick description. GFI is a decentralized credit protocol enabling real world loans without collateral. It bridges TradFi and DeFi, we call TradFi, allowing businesses to access capital through trust and reputation rather than through locked assets. So this is a very interesting project, and we're going to look at the website here because I think you really just kind of have to see it to kind of understand what it's doing here. Sometimes I would say that because I had not actually been to the website yet and I needed to buffer there, but actually, no, I actually am really studying a lot of these coins, guys, more than ever. So you guys can take what I'm saying about these projects as more solid than even you've heard me say in the past. When I'm talking about these projects with Altcoin Spotlight, like I've really dug into these and I've completed a course on every one. That may sound stupid, but it actually is. It's actually true. Real yields from real companies, really. Stop worrying about crypto games. Start lending your USDC to real businesses worldwide. So you can see here, they have a pool, a USDC pool. They've got different levels to this. I think they've got the senior, and I believe they do have another level under that, if I remember correctly. This shows right now they've got right at $100 million worth of active loan values. And we're going to talk about what all this means here in a second. 30-day protocol revenue. So I guess if you're in the short-term loan crowd, they've got $100,000 revenue there. I don't exactly know what the 30-day protocol is, to be honest with you. Explore Goldfinch deals. This is what I wanted to show you guys, and this is what I wanted to focus on here. These are different capital funds that you guys can invest in just as a regular person. And these are not collateralized in the same way that we're used to seeing in the world of crypto. Because one of the problems in crypto has been, what is the one kind of thing when let's say you are living your life completely traditional finance, like spending money, fiat, dollars, the whole nine yards, right? And then you wanted to move to a world that was completely decentralized. And so you're moving over your money, you're moving over your car payment, you're moving over everything, You're now living a completely decentralized finance life. what is going to be actually, we don't have a lot of good solutions for being able to figure out how to do. Do you know?
No.
Credit.
What do you mean?
Credit. It's credit. It's like getting.
Oh, because there's no credit issuance here on the
because it's all
crypto
collateralization. It's all collateralization. All of our loans we've been used to are collateralization. And I know I was putting J-Chains on the spot there. I was just trying.
No.
I was trying to see if maybe like it's always been a big thing I've thought of. If maybe other people, been in crypto for a while, like you might think the same thing. It's something that people don't talk about a lot, though.
Do you think that's good though to introduce credit into crypto? It kind of ruins people, like in a traditional sense, right?
Well,
to some extent,
some extent, it makes people. And
that's a good point. You get you get the good and the bad.
Yeah.
Okay.
Credit, right? Credit is the problem when it comes to decentralized finance. How can you do this? Well, this is privatized credit, and this is the next big frontier. I will go ahead and tease it. This is one of the things I was going to be talking about is private credit, and this is not the only one that we're going to talk about when I do this video. But you have Latin America Sustainability Fund. You have emerging Goldfinch Senior Pool. There's something about the senior pool we'll get to here in just a second. Goldfinch, you got tons of people talking about it here. You look at the back by visionaries. You see Andreessen Horowitz. You can see Coinbase Ventures. We've told you now be more bullish on these projects. They're Coinbase Venture related. Variant, Kindred, I don't know any of these other ones. Stratos, I know. Stratos Technologies. Put your stable coins to work. So optimize for yield or optimize for ease, sustainable yields, global reach, uncorrelated to crypto markets, liquidity with choices tailored to you. So you get to do the research. And here's the key, okay? This is the key right here. Invest directly in previously exclusive deals. You're now able to get access to some of the same types of different levels of risk, but kind of riskier deals that only accredited investors and certain groups of people got access to. You have now. That's why it's TradFi, because we can all trade. You can trade anything for anything now. There's a way to do it. You tell me what you want to trade, I can find a way to do it. We can go to a place like Centrifuge and we can find out a value and tokenize whatever it is. And now we can assign a deed or a value to that's driven by a ledger and blockchain, and we can sell portions of that for investment or ownership, whatever it may be. We've never been able to do this before, but everybody can do it. And this includes investment opportunities. So evaluate individual deals and supply USDC. All you got to do is own USDC directly to attract borrowers across a global reach of high return markets previously only accessible to institutional insiders. Assess borrowers, back the ones you believe in with first loss investment on secured loans. So this is the idea. You get to go do the research. You get to pick who you put the money in, and they have these different scores. And I would say, man, be careful. I mean, I'm sure this is somehow backed in a way that I had not gotten to yet, but maybe your money's safe no matter what. I don't think that's a real thing, though. And remember, you are lending money to someone who doesn't have collateral, making you, in a sense, a lender. And sure, all these are great. But what if you invested in a Latin America fund and God forbid, we were to find out that Latin America was not real. It was actually just a figment of our imagination, and it didn't exist. And you invested all this money into it. And you may laugh at that. And I'm sure you know people from Latin America, and I do too. And so I'll laugh as well. But if you didn't know, the biggest Ponzi scheme, that really kicked off Ponzi schemes in the world, was basically these guys over in London, I think it was, selling tickets to sail to this island that didn't exist. And they just kept taking all this money in for this stuff. And that's a real thing that did happen. It's actually it may be who the Ponzi scheme is named after. I can't remember, but it's the godfather of marketing was that guy for sure. So, okay. So why is GFI interesting? I did want to give you guys that one warning about GFI to think about. It's not collateral. You'd have to do your own research. Maybe it's not a risk. But that doesn't seem right, does it? Does it seem that you can invest in something and if it went to nothing, there would be no risk? I don't know.
Seems too good to be true.
Seems too good to be true. So I would just keep that in mind. Okay. Why it's interesting. Credit without collateral. Borrowers access loans based on trust. And here's the cool thing is This is creating a model for credit, okay, privatized credit, and it's showing how it can be done and paths towards getting it, maybe, if you're a legitimate company and it's something you feel like you're going to need. Because we're moving out of this world in crypto where everything's VC and everything is, you just need one big guy to come in here and put you some money, and then you raise a token and you get all this money. I mean, it's getting too oversaturated, and we're getting too many winners for that kind of thing to continue. So, okay, real world impact. Financing businesses in emerging markets. We just looked at a lot of those markets that they have available to Latin America. There was another one that's another kind of geographic fund. Investor options, you can come in as a backer, and this is where you have the higher risk. It's the backer, right? That's where you are getting the risk. And I guess this is the backer. That's right. The backer is the one we did read about here, where you're taking on the risk basically, but you're getting to say, hey, I think they're good for it. They also have liquidity providers. So liquidity providers, those are going to be the people that are going to make the yield, which is going to be consistent money they can count on, but it's never going to be a ton. It's going to be consistent passive income. And of course, GFI staking and governance. This is one thing that does make all of these protocols interesting, is the way they're governed, and they're not governed by CEOs that sit at tables or that sit in physical things. So some stuff recently about GFI. They recently have these things called callable deals, and I believe that is where you can at any point access your money. And this year shows some of the companies that they've invested in, that their people have invested in. Chorus, this is DeFi to fintech. I was looking, some of these are pretty interesting. Faz, let's see, this is the Latin America one. I think this is the one I looked at. I thought was kind of interesting. Yeah, Mexico and Latin America. I think Mexico is a very big, fertile place for an economy to sprout up, based on the fact they're doing a lot of the same things that China was doing many, many years ago, by investing a lot in infrastructure for factories and kind of becoming a place that people outsource to, similar to maybe India or China was. So, okay. So here's the actual app for GFI. This is what it looks like. It shows the active loans right now, 58.9 million, about 60 million. It shows total loans repaid. They've just hit basically the double spot where they got as many active loans as they've had repaid. So that's kind of a big deal here. These are a lot of their closed deals that they have. Here's their open deal. So senior pool, this is why this stood out to me, because I did see this before. One of the senior pools is currently in default. Wow, this may impact the returns on the investment.
Yikes.
Well, good news, guys, to my American buddies. It's only available to non-U.S. persons or U.S. accredited investors.
So let me ask you a question.
Oh, man.
So typically, like in traditional finance, you have to have $1 million to be considered a accredited investor.
Yeah.
Is that the same in crypto?
Well, yeah, because it's just TradFi. Because now it's TradFi. It's all one thing. You have to stop thinking about it as two things.
Okay. So same threshold.
Same thing now. Yeah,
you got $1 million
thing.
crypto, you're good to get in.
Yep.
There you go.
So anyways, they also, the callable deals, I do know what the deals are. This says deals. I don't, maybe if I connect my wallet, it might show more. I don't know. I haven't actually connected my wallet to this before. But what I will tell you is the callable deals are the portion of GFI that allow you to basically call the loan back early and get your money back. You can basically get your money back at any point. So if you were feeling like, oh, you know what, maybe this is a bad idea, you can pull your money out if you do the callable deal. I believe is exactly what that is. RWA expansion, they're strengthening real world assets by allowing companies to get funding. And of course, we know a lot of the way they're going to get those funding could be through tokenization or RWAs based on collateralization of things like property. It makes sense. We'll get more into that tomorrow with real estate. Growing adoption, they've got $100 million in loans plus. We see now about 128, 129, 28 countries. They got partnerships everywhere, driving adoption, fintech, institutions. And this is another one, like I said, we look at the chart. It looks like it's death spiral in the long-term historical chart. It's either going to die or it's going to boom. And when we look across the landscape and see so many of these decisions, and we realize they're mostly all going to go the same way. Man, it looks exciting to me. I don't know. Are you guys excited? Smash the like button if you're excited. If you're excited, smash the like button. Because I am excited every day about crypto. I have not been this excited about crypto since probably we were doing the ETF stuff. I mean, I'm more excited now, I think, than I even was then. But that's the last time I was really excited about some crypto stuff. Goldfinch brings real world lending on chain. Final thought about Goldfinch. We'll pull up the graphic here and you guys get a final look at the old Goldfinchy. I love that it's gold. Man, I'm wearing my gold shoes today. We can show my shoes very quickly and then come back to the graphic. Wearing my gold shoes today. That's right, guys. My gold Gucci's. It's very expensive, nice shoes I used to buy when I had very expensive, nice money. But now I wear them as hand-me-downs. With Goldfinch here, we are looking at a project that a lot of people like. It's got a lot of really cool things. And I think its unique credit model, okay, is something that could accelerate adoption of decentralized protocols because people are able to get access to credit. And I think this idea is going to grow. I think you're going to see many people jump on board, and this privatized credit is the next horizon in institutional investing. You guys should be doing research on what kinds of projects are doing this, because this is, like I said, the next frontier. So this project already has had rapid adoption since it began having its protocols. And if you want to look more into it, we're going to actually do tutorials on this stuff and really dig in and connect wallets, like in the Bitboy BootCamp when we get into our RWA BootCamp. And so you guys want more on that, then you'll have to, I don't know. Do we have anything they can do? I don't think so. You can sign up for our mailing list. We'll put something somewhere. Thank you, guys. It's not really that important. It's going to be really good when it's actually ready to, you guys can go click sign up or whatever. It's going to be very soon. So super excited about that. So let's actually look at the GFI chart, and we are going to look at the daily chart as we are on. You can always know exactly what the current price is by looking at this little red box on the right side over here. And it has the price, $1.329, and it has how much time is left in this candle for the time frame you're looking at. So it says 6 hours, 23 minutes. That means on the daily, before the next candle, there's 6 hours and 23 minutes. And that goes all the way down to even the, I don't think they have it on the second chart. But outside of the second chart, I think they have that all the way up and down. So you can always know exactly where in the candle you're looking. So right now we are looking at the point of control here of GFI being up in the $1.40s. And right now we're about a dime below that. So we're making, it looks like we made a higher low here, so it could be on the way up. But what we want to look at here, potentially, is the double bottom that looks like it has had. When you look here, and here, going back to October, is this a double bottom? And the price did go slightly below. And we look at the wicks here, or the body, excuse me, the body coming in at $1.16, and then this body coming in like $1.18. It's definitely in the range, what I would call a potential double bottom. When you look at these prices now, look, if this was, 12 cents and if the bottom was 12 cents and 16 cents, that probably would not be a double bottom. I mean, that's a 25% difference, right? But we're looking at the difference between $1.18 and $1.16 or $1.15. It definitely, in my opinion, qualifies. This would qualify as a double bottom. I do the same thing with double tops. I mean, you definitely look at the last market, and yes, we had 64 and 69, but that was a double top. Don't be confused. Same thing with Litecoin. Litecoin, it's sure it made a new all-time high last time by like a couple of bucks or something. That's a double top. You can look at it and you can know. And so are we looking at a double bottom here as the bottom of this coin? And are we looking, when we looked at the longer historical chart, are we looking at the downtrend being right at a position where it's got to either basically send the coin to nothing or either propel it to greatness? And I don't know. Call me crazy. I'm a sucker for greatness.